Welcome back to the Deep Dive. Today we're tackling a question we know is top of mind for many of you. How can you actually earn cryptocurrency and grow your digital asset holdings without getting, whipsawed by the volatility of active trading?
Mm-hmm.
You're interested in increasing your crypto, but the constant ups and downs, the charts, it can feel like a whole other world, right?
Absolutely. It's a very understandable perspective. I mean, the potential of crypto is exciting, definitely, but that daily grind of trying to time the market, it's just not for everyone.
Yeah.
You're looking for more stable, maybe even set it and forget it ways to accumulate crypto.
Exactly.
And that's precisely what we're aiming to unpack in this deep dive.
Exactly. So our mission today is to construct a concrete 5-step plan. We've looked into various expert insights from the crypto space. And yeah, a lot of it talks about trading tactics, risk mitigation.
Right, it's the usual stuff.
But we've pulled out some fundamental principles, things you can actually apply to generating passive crypto income, growing your holdings without needing to stare at charts all day.
And what's fascinating here, I think, is that even within that trading context, certain core ideas like, say, diversification or just understanding how different parts of the crypto ecosystem work, well, they're incredibly valuable when you reimagine them for a passive income approach.
Yeah.
It's about taking those underlying concepts and just applying them with a different goal in mind,
Okay, yeah, that makes sense. So let's dive into step 1. We're calling it diversifying into multiple small positions. Now, this might sound like it's straight out of the trader's playbook.
It kind of does, yeah.
And in some ways, it is. One of our sources mentioned this no-brains and very little money approach to investing.
Yeah, I saw that.
And it sparked an interesting thought for this whole passive income angle.
Well, what caught my eye was the principle of going wide and small. The original idea was finding altcoins that had formed a specific chart pattern, a 1, 2, 3 bottom, they called it,
right,
which basically suggests a potential upward turn after a big price drop, a capitulation low. They mentioned December 20th, 2024 specifically. The idea was to put like $5 in each.
Yeah.
Just tiny amounts.
Right, just $5. And the initial goal, was to maybe catch a quick price surge, a popcorn move, as they put it. But if we look at this through our passive income lens, the key thing is diversification.
Exactly.
By putting really small amounts across a whole range of different projects, different platforms, you significantly up your chances of stumbling upon various passive income opportunities without putting yourself out there with huge risk in any single one.
Mm-hmm.
Think of it less like trying to predict the next big pump and more like casting a wider net, just seeing where those passive income streams might actually pop up.
It's like having those lottery tickets instead of betting everything on just one number, isn't it?
Yeah.
And the source even kind of hinted at this. Viewing these tiny initial investments as a sort of insurance policy.
Mm-hmm. A minimal outlay, but it carries the potential for significant returns, or in our passive income case, developing an actual income stream from one or maybe more of those little bets.
Exactly. You're not making some high-stakes gamble on one specific coin. You're making small, exploratory moves across the whole crypto landscape.
Yeah.
That inherently limits your downside, doesn't it?
Right.
While keeping you open to all sorts of possibilities for passive earnings.
All right, that's a solid foundation. Let's move to step 2, utilizing referral links and affiliate programs. This is a bit different, less about direct investment, more about leveraging your network, maybe content you create.
Yeah, this is where we see how your own efforts, maybe sharing info, can actually become a real source of passive income. One source specifically suggested writing blog posts when new coins get listed on exchanges.
Okay.
And then putting your unique referral links to those exchanges right there in the post.
Okay. So the idea is someone reads your post, gets interested in a new crypto, clicks your link to sign up for the exchange, and starts trading.
And boom, you, the person who wrote the post, can earn a percentage of their trading fees.
Right.
It creates this stream of passive income that comes directly from the value you provided in your content and, the activity of the people who signed up through your link.
And the really powerful part there is once you've made that blog post, or maybe a video, whatever it is, with your link in it, it can just keep attracting new users and generating income for you over the long haul, right? With relatively little ongoing effort.
Exactly. That's the core of passive income, isn't it?
Yeah.
Setting up systems that generate income, even when you're not actively working on them right that second. Your initial work becomes a lasting asset.
Okay, step 3. This takes us into exploring staking and lending. Now, Our sources didn't exactly frame these as completely risk-free passive income.
No, definitely not.
Yeah.
Important caveat.
Yeah, and it's crucial to get that some level of risk is pretty much always there in crypto.
Always.
But the goal we're focused on is how to grow crypto holdings without actively trading the price swings.
And staking and lending. Well, they're two of those common ways people do exactly that. They achieve that kind of passive accumulation inside the crypto world.
So, explain staking quickly.
Sure. When you stake certain cryptos, you're basically locking up some of your coins to help run and secure the blockchain network.
Okay.
And in return for helping out, you usually get rewards, like more coins. I think you're kind of like earning interest in a bank account, but,
Yeah.
With crypto, and you're directly helping the network.
Got it. And lending.
Lending is pretty much what it sounds like.
Yeah.
You make your crypto available for others to borrow, usually through specific platforms, and in return, you earn interest on the crypto you lent out.
Okay.
And what's interesting here, connecting back to what the sources said about holding coins long-term, is the potential for the value of the actual coins you're staking or lending to go up over time. Just like Bitcoin went from pennies to, well, what it is now.
Right.
There's a chance some of these other cryptos you might pick up, even those tiny amounts from step one, could also see huge growth down the line.
So, okay, there's always the risk the price could go down.
Of course.
But the passive growth bit, earning more coins through staking or lending, that fits perfectly with wanting to increase holdings without trading.
Yeah, and this step really shows why you got to do your homework. Once you have some crypto, even those small diversified bits, the next logical step is researching specific staking platforms or lending platforms that work with those coins.
Right.
You need to understand, how are rewards calculated? Are there lockup periods for staking?
Yeah.
What are the terms, the risks on lending platforms? Are the loans collateralized? What happens if someone defaults? That kind of stuff.
Crucial details. Okay, step 4 is about learning and applying a systematic approach. Now, even though we're talking passive income, not active trading, the idea of having a plan, a system, that's still really important, isn't it?
Absolutely. It's maybe even more important in some ways.
Mm.
You could track potential referral earnings, maybe outline some content ideas, guess the reach, see what that might generate before you publish.
Or just watch the staking rewards for a coin you hold on a platform for a while.
Right. Before you actually stake your own crypto. It lets you build understanding and confidence without putting your assets on the line right away in that specific activity.
So it's about being intentional, informed, not just crossing your fingers and hoping.
Precisely. A systematic approach helps you avoid pitfalls and just really get the processes involved. Even passive income needs active setup and learning up front.
Okay, makes sense. And finally, step 5, long-term perspective and reinvesting extra money. This kind of brings it all together, connecting back to building wealth over time, which, was a big theme in the sources talking about long-term success.
Yeah, the principle of taking any extra money, any crypto you earn from referrals, staking rewards, lending interest, and putting it back into the crypto ecosystem. That's key for really significant long-term growth.
Ah, the magic of compounding.
Exactly. It creates this powerful effect. Your initial small investments, your efforts setting up these passive streams, they start generating more crypto, which you can then use to earn even more passive income, or just hold on to it for potential long-term price growth.
And this ties right back into that long-term vision, right? The possibility of some altcoins seeing massive growth over years.
Yeah. By consistently reinvesting what you earn passively, you're slowly, steadily increasing your exposure to that potential, but without having to actively trade the market's ups and downs.
So it's about playing the long game, understanding that building a serious crypto portfolio, sustainable passive income, it takes time. It takes consistent effort, even if that effort isn't constantly watching charts.
Absolutely. And what's really cool is seeing how these ideas from active trading, diversification, learning systematically, having a long-term view can be cleverly adapted for a totally different goal. Passive income and just growing your holdings steadily.
Okay, great. So let's quickly recap that 5-step plan for everyone listening. 1, diversify small positions, lots of them, explore opportunities. 2, leverage referral links, affiliate programs, make content work for you. 3, explore staking and lending to passively grow the crypto you already hold. 4, learn systematically, understand the mechanics, the risks before you jump in. And 5, think long-term, reinvest your earnings, let compounding do its thing.
And it's just so important to remember, like we said, even though the sources talked a lot about trading, the core principles are super adaptable. Diversification for trading risk becomes diversification for finding passive income. Systematic learning for trading becomes systematic learning for understanding staking or lending. It all translates.
And of course, as we've stressed, doing your own deep research into specific platforms, coins, the nitty-gritty details of staking, lending, that's essential. You have to find what fits your own comfort level with risk and your interests.
Absolutely. Which kind of leads to a final thought, maybe something to chew on.
Okay.
Consider how those initial, maybe small-seeming steps you take today, focusing on these passive income paths, how could they contribute to really substantial growth in your crypto holdings, your overall financial picture, years down the road, even if you never, ever actively trade the market's craziness? It's like planting seeds, right? You plant them now, nurture them patiently, and see what grows over time.